Us my sincere compliments to RBI and to the Governor for managing the COVID crisis, for the kind of measures what Reserve Bank of India has taken during the COVID crisis. They have been indeed, great, and they are the reason why Indian financial sector is very safe. Governor Das, while you alluded to the big picture, as a journalist, I'm tempted to first start with the near-term challenges. And the near-term challenge, Governor Das, is that unfortunately, the COVID cases have been on a rise. Does that challenge your economic forecast? We were hoping, praying for a V-shaped recovery. Is it time to say the V could become U?
Look, in the Reserve Bank, we have never given our projections or forecast of growth in terms of any alphabets. But having said that, you are aware that we have given a projection for next year, the growth rate to be, the GDP growth rate to be 10.5. Our research teams are currently working on the incoming data on the high frequency indicators. And as you know, the next monetary policy committee will come up in the first week of April or so. And we will give out our forecast on that. Now, I entirely agree that the renewed surge of COVID cases in many parts of the country is a matter of concern. But I think we have to also keep in mind that this time around, compared to where we were, let us say last year, March, or last year, April, this time around, we have some additional insurances against the impact of COVID-19 pandemic. The first is that there are 2 vaccines which are being rolled out, and the speed of rolling out that vaccine is, it's moving very fast. And about 5 crore people have been vaccinated. So that is number 1. And number 2, the second aspect is that overall the people are by and large more used to the COVID protocol. So one would expect the people, people who had, it appeared that they had lowered their guard, but I'm sure people will, sort of step up their guard against the spread of COVID pandemic. And third, at this point of time, one does not foresee a kind of lockdown that we had to, we experienced last year, because last year it came as a huge shock. This time we know what COVID-19 pandemic is all about, notwithstanding some new strains which have developed. So I would feel that the economic activity, the revival of economic activity which has happened should continue unabated going forward. And I don't foresee, although I should not be saying it before the details are presented before me by our research teams, but my understanding and our preliminary analysis shows that the growth rate in next year, that is at 10.5%, which we had given, would not require, I repeat, would not require a downward revision.
Can I say that a downward revision for growth is not required, but there is no need for an upward revision for inflation also, despite the fact that food prices and oil prices have gone up?
I can see the journalist in you, Nikunj. I will not bite that. I think you have to wait for the Monetary Policy Committee to give out the growth projections.
Governor Das, allow me to bring your attention to what is happening to bond yields. And it's a global phenomenon. They say never fight the central bank. But despite comments which have come from the US Fed early last week, and also what Reserve Bank of India is in a sense attempting to keep the yield curve under control, is there a question mark which has been raised now on central bank's ability to keep the yields under check?
No, I would like to say that there is no fight. I mean, there's no fight between the central bank and the bond market. At least I'm talking about India. And I have said earlier also that the relationship between the central bank and the bond, the bond market players, it's not, it need not be combative, and it has to be cooperative. What we are emphasizing time and again is that there should be an orderly evolution of the yield curve and not sudden spikes or any knee-jerk reactions to certain incoming numbers. Now, government borrowing remains almost in the same region as it was, for next year, the borrowing numbers are the same as it is for 2021. But I have explained on a number of occasions earlier that, the Reserve Bank is there very much on the, in the field. And the Reserve Bank, I have given out the numbers. In fact, I have given the arithmetic of it also. And I would just like to repeat for the benefit of your viewers and the audience here. You see, the central government borrowing, the net borrowing is 9 lakh crores. And current year, we have done open market purchase of government bonds of about 3 lakh crores. So next year, it's not going to be any less than that. If at all, it will be, it will be more than that. So you have 3 lakh crores coming from OMOs, minimum 3 lakh crores. And we have also given special dispensation with regard to the, the hold to maturity dispensation, which brings in another 4 lakh crores. So 7 lakh crores is already available, and the gap is only 2 lakh crores. And we are confident that we will be able to manage the bond yields. All that we are emphasizing on, and all that we would like to stress time and again, is that an orderly evolution of the yield curve is very important for two reasons. Number one, a disorganized, disorderly yield curve evolution will act as an impediment for growth, will undermine the process of economic recovery, not just in India, but in all countries. That is why all central banks are concerned with this issue. And second thing is that why bond yields are important. Bond yields are important because they are the benchmark for the cost of money for the private sector. As you know, the private sector borrowing from the markets are benchmarked on the government securities of, let's say, 3-year or 5-year maturity, or sometimes 10-year maturity. So therefore, all that we are emphasizing on, and which central banks across the globe are emphasizing on, is orderly evolution of the yield curve. You would recollect Jerry Powell, the Fed chief, about 2 weeks ago, he also mentioned about the orderly, the orderly conditions of financial markets.
Governor Das, let me bring your attention to the currency. India's Forex reserve, 4th highest in the world. What is RBI's definition of comfortable and surplus? Because that, in a sense, will tell us that what level Reserve Bank of India would like to say is necessary and what they would say is now getting surplus.
It's a dynamic situation. The first thing I would like to say is that there are two objectives in our Forex intervention. One is to prevent excessive volatility of the exchange rate of Indian rupee vis-a-vis the dollar. There should not be excessive volatility, and that is the main theme of our intervention in the Forex market. The second theme is that emerging market economies need to build up their own buffers. We have experienced and we have seen the adverse impact and the negative fallout of the taper tantrum of 2013. We cannot afford that kind of a situation again. Now, the expansionary monetary policy which the advanced economies are undertaking, at some stage, they will unwind and they will reverse. So at that time, the spillover impacts is maximum on the emerging market economies. And emerging market economies have nowhere to go but to look at their own buffers. So therefore, like any other, many central banks, Reserve Bank is also, we are building up our own buffers to deal with such situations. In fact, earlier, this approach was frowned upon by free market economists and those who emphasized very much on the market. But if you see the recent framework which has been brought out by the International Monetary Fund, IMF, even IMF has recognized that Forex intervention has become necessary for emerging market economies to deal with volatile situations and to deal with adverse situations. Now, what is an adequate level? 20 years ago, mind you, 20 years ago, it was viewed that 1-year import cover is sufficient. But there are various parameters and yardsticks by which the adequacy of Forex reserves is measured. Today, we have our import cover, our Forex reserves, they sort of represent an import cover of about more than 18 months, that is more than 1.5 years. But internally, we have no such target of reaching a particular level of Forex reserves. It all depends on so many factors, how the international situation develops. It's a very dynamic world, and we will have to deal with as the situation unfolds.
Governor Das, but looking at the fact that the economy or Indian economy is changing, PLI schemes, we are trying to move towards global competitiveness. Is Reserve Bank of India committed to keep the rupee competitive?
We will keep the rupee stable. The exchange rate, it's our endeavor always to keep it stable because certainty and stability is good for investors, it is good for importers, it is good for exporters. In fact, it is good for all stakeholders in the economy. It is also good for, thousands of Indian students who go abroad to pursue higher education. So, stability of the Indian rupee is the fundamental principle which we tend to follow, which we do follow at the RBI.
Okay, I'll take the liberty of asking you 2-3 more questions more. I know I'm shamelessly extending my appointment with you. Governor Das, has the government taken RBI's opinion on which are the government banks which should be privatized, something which the finance minister referred to in the parliament when she tabled the budget?
So this is a matter which is constantly under discussion between the central government and the Reserve Bank of India. And it's a subject which is constantly discussed. But yes, government doesn't need to sort of, yes, we had discussions definitely before the budget and more after the budget. So naturally, the process going forward, we have, the central government always takes into consideration the viewpoint of the regulator, and we are under discussion on this issue.
Is there a difference of opinion on cryptocurrency? That's the sense which we get if we look at what the Reserve Bank of India has stated publicly versus what we got from the finance ministry?
I don't think the finance ministry has, or the Reserve Bank, they have given any different points of view. All that we have flagged to the government, and I have reasons to believe that the government is in agreement, is that central bank digital currency is one thing. The cryptocurrencies which are being traded in the market is something else. Both RBI and government are committed to financial stability. We have flagged certain concerns around these cryptocurrencies which are being traded in the market. We have flagged certain major concerns to the government, and it is still under examination in the government, and government will come out with a decision sooner than later. I think that is what the government have, at various levels the government has articulated. I don't think there is any difference of opinion.
Governor Das, Bill Gates famously said, banking is necessary, banks or not. In this decade, since we are talking about the theme of this decade, how exactly is Reserve Bank of India ready for the changes which will happen? One side, you've got banks, the relevance of banks. Second side, you've got fintech. On the other side, you've got NBFCs, which are becoming fintech. Very dynamic changes are happening. Is Reserve Bank of India prepared for it?
You see, that is why, in fact, this is precisely the background in which I devoted considerable portion of my address to fintech and to digital, digital appraisal of credit sanction, to digital appraisal, to digital methods of lending, etc. So going forward, the digital methods are going to play a major role, but the banking sector will continue to remain relevant. And banks have a major role to play. What I emphasized is that the banks also need to adapt new technologies and adapt the changes and the transformations which are happening in the world of digital lending and in the world of digital technology to remain in sync with the times. In India, I see a situation where the banks will continue to remain vigilant, but the method of operations of the banks, the method of working in the banks, for the banks to reach, to sort of promote financial inclusion or to reach a wider segment of the credit market, I think the methods will be more technology dependent going forward.
Right. Final question, Governor Das, in this pandemic crisis, for you personally, what has been your most joyful moment? What has been your most painful moment?
Well, painful moment has been that, so many people losing lives. I'm not trying to sort of, this is something about which I'm saying this in all seriousness. I mean, so many people losing lives. Livelihoods have been lost. We have, many of us or our friends, we have lost our near and dear ones. So that has been a very painful moment. You hear suddenly somebody you know, or that he is no more. And so that has been a very painful moment from time to time when you hear such news. And the most joyful moment, well, the central banks have to always keep their fingers crossed. The central bank governor has to keep his finger crossed, be very watchful, should not should not ever bask in happiness or joy that the innings is over and a half century or a century has been scored, because every day is a new challenge.
Well, Governor Das, on behalf of everyone from the Times Network and everybody present here, thank you very much, and my sincere compliments to Reserve Bank of India. You've made the impossible look easy. Same time last year there was gloom and doom and there was fear. Now we are talking about growth. That time we're talking about depression and contraction. Really appreciate your time, sir, and thank you for joining us.
Thank you, Nikunj, and thank you for all your viewers. Thank you. Namaskar.
Thank you, Governor, and thank you, Nikunj, for that. In fact, the words coming in from the Governor, very, very important that the revival